All right, good morning, everyone. Tim Davis here, coming to you guys with another weekend market review. And this weekend, we're going to start out taking a look at the daily chart of the S&P 500. And again, we are still in a bear market cycle. And I want to highlight a couple things to show you guys how these cycles run. And this channel that I have clearly mapped out here shows the overall channel that this bear market has been traveling in. So we go up to the top of the channel, back down towards the bottom of the channel, back up to the top of the channel, back down to the bottom of the channel, up to the top of the channel, bottom of the channel, and we're probably still heading back up towards the top of this channel, which in turn will probably end up meeting the 50-day moving average before heading back down. Now, these cycles can take days or it could take weeks, so that's something that you need to map out accordingly. But if you look at the near-term charts, you can almost see where we are within the channel reversals. So let me go back to a daily chart here. So if we look at the daily chart, what we'll see, a couple things. A couple things I'll point out is that right around May, sometime near the middle of May, we made a low point. Not all the way back down to the bottom of the channel, but a low point. You can almost see these reversal candles that start to appear when we see reversals back to the upside. And also another thing you're going to have to pay attention to is the volume, and I'll show you that when we look at the individual ETFs of the indices. So you see these rallies back up to the top of the channel. And right here on this time frame, we pretty much stayed up around towards the top of the channel, at least for about 2 weeks or so, and then back down towards the bottom of the channel. And then, very interesting thing happened on around the 20th of June. I'm sorry. I see this almost like a doji pattern after a cycle down day, and then we had a rally up. Was bulls and bears was hard pressed to make a decision which way they want to go. Then we put in almost a doji pattern. Then what happens? We get a rally right back up. Didn't quite make it back up to the 50-day moving average. Then we came back down just a little bit, and then look what happened. Another reversal type pattern. It's like we're heading back up towards the top of this channel still. Now, within this, one thing I like to always point out is pay attention to the gaps as well, because the gaps can also give you some type of clue as to where prices could be making an attempt to rally to. Now, I pointed out some gaps within this market after we had this downturn from here. Oops. So after we had this downturn from here to here, I pointed out that on the way down, during that downward cycle from the top of that channel, there were a couple gaps that were placed in here. There was a gap here. There's a gap here on the way down. So more than likely, a lot of times when you see these gaps, what the market makes an attempt to do is to make an attempt to rally back up towards those gaps. And those gaps could be right at key levels. With these two gaps, let me do this. With these two gaps here, I want to point out something. So the top of this gap here, if I was to draw a trend line from here over to here, that gap will get us back up towards back up to that 200-day, I'm sorry, 50-day moving average. This gap here, gets us back up to this point. So there are a couple levels of resistance that I think the market is going to make an attempt to test over the next couple weeks, over the next week. Next week is a short trading week since it's 4th of July. But here are some key levels that we can look for levels of resistance. So with this reversal point, I think we'll probably make it to this level, probably punch right through that and make an attempt to rally back up to test this 50-day moving average, and that will take us back up to that gap fill point. So we could see the S&P rally over the next next week or so, maybe another 100 points or more. So, and if you look at the short-term chart, you can see that's a pretty decent rally within this bear market. So the rally could be still intact, folks, for now. And if we look at a 4-hour chart, see how it looks in reference to the 4-hour chart. Again, that will take us right back over this 50-day moving average on a 4-hour chart, maybe back up to fill this second gap, which will take us pick the S&P back over above 4,000, just above 4,000, and just below that 200-day moving average. That's where I think we'll probably see some significant resistance. And then once we finish this bear market rally, we back up towards that 200-day on the 4-hour chart. Watch out below, because we could really be heading for another significant drop down like we did here when we hit this 50-day moving average and came back down. We could do the same thing once we get up to just above this second gap and head right back down in a fierce way. That could take us to, you know, the second week in July, maybe the end of the first week of July. We have to see how that pans out. But there's some significant events that are coming up. The Fed speak, which is around, I want to say the second week in July. That could be another market catalyst for the markets to do one or two things. And normally we see what happens when the Fed speak. Fed normally induce some type of rally to not scare markets, and then markets sell off. So that's something to be mindful of as we go through the month of July. All right, let's go back to a daily chart real quick. Some other telltale signs that this rally could continue for just a little while longer. Look at the wins percentage for these full stochastics as we made it to oversold territories, and now we're starting to see the oscillator starting to turn up, and we got another signal here that's saying an oscillator right here, which is some people use it as a telltale possible buy signal. Not saying that it's a edge in the stone buy signal, but when you have these oscillators, when you have the green crossing back above the red, that's another sign that some momentum is continuing to move to the upside. Let's look at the RSI. It too is starting to hinge up, and whereas percentage came from overbought territory, but starting to hinge right back up. So that also leads us to believe that this rally could continue through the 4th of July week. And again, this is a telltale sign when we see this possible reversal pattern in these two candles that have formed over the last couple of days. So again, I do expect that we could see some type of continuation in this rally as we go through the beginning of July and the beginning of a new quarter, folks. Beginning of a new quarter, yes. Ultimately, I still think that this quarter will probably end up negative, just like the past two. So I think eventually, beginning of this quarter, I think we still see some type of rally, try to get the bulls motivated until they start to run into some heavy resistance once we get back up towards this towards and above this 50-day moving average on the daily. Start to run into some serious resistance. So let me do that. All right, so watch out for those gaps, because those gaps are probably going to make an attempt to fill over the next week or so. Look at a weekly chart, you'll also see that we've just been skating around these oversold territories. So the market's probably looking for some reason to rally. And if we look, what I pointed out this past week, carefully at this daily chart, it's this weekly chart. on the S&P, right back at that 200-day, which is normally that's a strong level of support. So the market is really fighting to make a strong stance at this point. So again, the weekly chart even shows you that it's bouncing right off this 200-day, making an attempt to go right back up to test that 50-day moving average. And I think that's where we're going to see the ultimate fail. So again, for the next couple of weeks, next week or so, maybe through next week, we'll see another positive week, maybe back up to the top of the trend line, top of the channel, and which will probably coincide right along with that 50-day moving average on the weekly. And then we can start to see if the bulls are really motivated and punch right through this 50 and continue to ride up to all-time highs, which is highly unlikely. So again, short-term bounce in the markets, which would be good for you short-term traders looking for a bullish move in certain areas of the market. Trading these ETFs on the indexes probably be a good way to play it. But if you look for individual stocks, each individual stock has its own method of traveling through this bear market. So just because there's an overall market rally doesn't mean every stock participates. So that's something you got to be mindful of as well. All right, let's look at the S&P. Now I'm gonna switch to the VIX real quick. Then we get back to the other couple indices, because the VIX also is a telltale sign to give us some type of heads up of what we can expect. Now, one thing I saw on the VIX this past week is a big red candle that was put in yesterday. Folks, that's one of the most bearish candles that you can get. Marubozu, which is there's no shadow, hardly no shadow on the top, no shadow on the bottom, one solid red candle, which normally signifies the sellers are highly motivated. So because VIX attempted to get this rally out of this range, the sellers came in and just pushed the price action right back down. So I'm not looking for a tremendous sell-off in the VIX, but I do think looking at this daily chart, we could make an attempt to come back down to test these lows or test this 200-day moving average at least. So keep that in mind, that the VIX could definitely come all the way back down, as we're almost in oversold territory. So back down towards this 200-day, maybe even just a little bit lower, to test some of these lows that we've seen when we finally got that gap up around this level. So I do expect for this to happen. So it's a possibility we can definitely see the VIX drop all the way back down below 25, maybe even below 24, till it starts to try to find some type of footing, just like we did back here. So the same as we did back here, we're probably going to end up seeing the same action as we head through the beginning of July. See some movement back down towards the 50-day moving, I'm sorry, the 200-day moving average on the daily chart, and right around this level of support. Then we had to start see what happened with the VIX at that point. We probably had some oversold territory. Then look for another big crazy bounce, or maybe even another gap up just like this one. So that's something to pay close attention to. So again, this is all kind of like reiterates the possible continuation of the up cycle in the current overall indices and the down cycle in the VIX. So we hit a level of support, and then look for a significant bounce. Folks, as long as this VIX stays above 20, markets are still in dangerous water. So don't look for this bear market to be over anytime soon, but we'll continue to see these bear market rallies within the bear market. All right, now since we took a look at the VIX, let's switch back to a major indice by taking a look at the Dow Jones. All right, looking at the Dow Jones, U2, same scenario. There are signs that this rally wants to continue in the near term. Looking at the full stochastics, the oscillator is still turning up. As percentage oscillators starting to turn up, RSI oscillators are turning back up. So with this one, I want to watch carefully. I think the Dow probably end up reversing before the others, just because of price action, the way this price action looks. I don't think it'd be very, very bullish to think we'd make it back up to the top of this channel, especially with price action really running into resistance. The last time it reached this 50-day moving average on a daily, it reversed quick, or it stalled out there. There is a slight gap here. So I do think price can make it back up to that point and probably feel like that, maybe even go a little bit higher than here. But I honestly think that the 50-day moving average is gonna act as a strong level of resistance for this Dow Jones. I don't think we're gonna make it back up to the top of this channel, but anything is possible. If we do, that'll be a level of resistance. But my first level is going to be looking at what happens over the next week or so as price action makes it back up to test that 50-day moving average. I think that's going to be a strong level of resistance. So that's the Dow Jones. Look at a weekly chart of the Dow again. Same scenario, making a bounce right off of that 50-day moving average. So, and again, with the way price action looks, again, we could make it back up to the 50-day. Making an attempt to make it back up to the 50-day on the weekly chart, and that would definitely push us right back up to the top of that channel. So over the next 2 weeks, we could see price action punch through that 50-day moving average on the daily and make a run back up towards this channel, top of this channel. So those are some levels that we need to watch over the next 2 weeks. All right, take a look at the NASDAQ. Same scenario, NASDAQ back to its 200-day moving average on the daily. I think the NASDAQ will probably peter out quicker. Now, NASDAQ, I think, is probably a more dire situation than the others. If you see what happened with the SMH last week and the semiconductors, it was weighing heavily on this market. So I think the NASDAQ is going to be extremely mixed over the next 2 weeks. I think we'll make a run again back up to, this is the weekly chart, back up to this area here somewhere in an attempt to test the upper band of this channel. And then that's probably going to pair right up with this 50-day moving average. If we look at the daily chart, so if we look at the daily chart, again, we can see price action continue to go up, run into this 50-day, maybe run into some resistance, just a little resistance here, and to see what happens once we get there. And then if we punch through that resistance, right back up to the top of that channel. And I think that'll be the ultimate level of resistance. So resistance here, and then resistance here. And I think that's where we stop. If we punch through the 50-day, then I don't think we're going to pass the upper part of this channel. And that's NASDAQ. Now, let's take a look at the Russell. Same scenario. I think the Russell will make an attempt to run back up towards this area here. Right at the 50-day, then maybe even a little bit higher. There's a gap fill on the Russell right here. So that would take us all the way back up to this 50-day, maybe even a little bit higher. So maybe another 60, 70 points on the Russell, possibly right up towards that 50-day. Then we're going to see what happens once we get to that level. All right, let's take a look at one more thing, folks, which is look at crude oil. Crude oil had a significant pullback, and along with natural gas, had significant pullbacks over the past 2 weeks or so. So now, what next? Same scenario. I think the crude oil is at a level. Same thing. It looks almost set it up just like the markets. Hit that level of resistance, got a little bounce, it came right back down, and looks like it's ready to turn back up. So I think crude may be ready to make another rally back above its 50-day moving average on the daily. So that's something to pay close attention to. Here is weekly chart. It has some strong volume coming in here on last week. So to see if we get this pivot with the oscillators turning back up on the weekly chart, that would be strong for crude. So that's something to watch for next week. If you look at nat gas, oversold. Nat gas really got crushed on last week. You got crushed. Nat gas, folks, got as high as $9 back in beginning of June. And since then, had a significant sell-off. $9, almost $10. A strong area of pretty strong area of resistance. Sold straight off, back down to the 50-day moving average on this daily chart. Look at the weekly chart. Back down to the 50-day moving average. So we could see a start to see a reversal in nat gas after. It really got crushed. So it's definitely in oversold territory now. If you look at the daily chart, deep in oversold territory. So I'm looking for reversal in nat gas. It may be a good place to play for a bounce off of this 200-day moving average on this daily chart. We could see a reversal back in nat gas, back to the upside. So that's something to pay close attention to. All right, folks, I think that is all we have to offer. Again, folks, next week is a short trading week. It is 4th of July week. Pay close attention to the bear market rally as we enter into the beginning of a new month, beginning of a new quarter, and start to pay attention to the overhead levels of resistance, because if you stay too long on the bullish side, you're going to get crushed, because once we hit these certain levels of resistance, we could see massive reversals in this overall market, since we're still in the bear market phase. All right, folks, until the next video, Tim Davis signing off. Enjoy the rest of your weekend, folks, and please do have a happy and safe 4th of July weekend.